All right, let's talk about something that lands in your inbox and can feel like both a massive opportunity and a source of massive anxiety. I'm talking about the pre-market options hit list. We're going to break down how to stop treating it like a temptation to chase and start using it like the powerful tool it is, the way a pro does. So let's set the scene. It's early. The opening bell hasn't even rung yet, and bam, a list of potentially explosive stocks hits your inbox. That urge to just dive in head first, it's real, isn't it? But is that what a professional does? That very first move you make in that moment? Well, it defines everything. And that's exactly what we're going to unpack today. So here's the game plan. First up, we're going to decode what this hit list actually is and what it isn't. Then we'll get into the golden rule of how to react, not chase. After that, we'll dive into the critical confirmation window, talk about your responsibility as a trader, and finally, we'll draw a really clear line in the sand between being a trader and being a chaser. Okay, first things first. Before we can use this thing, we've got to understand what we're actually working with. Getting this part right is the difference between using this list to your advantage and letting it use you. Let's be crystal clear. A hit list is a tool for insight. It's for your pre-market prep, giving you a head start on where the money might be flowing. Now, what it is not, it's not a signal service telling you what to buy. It's not a direct, hey, go buy this now recommendation. And it's definitely not a promise you're going to make money. That distinction, it's everything. The timing is so key here. This list shows up super early for a reason. It's built to give you time to do your homework, to do your own analysis, and to actually get ready for the day. It's a preparation tool, not a panic button tool. Okay, section 2. Let's dig into the most common, most tempting scenario. A contract from the list just absolutely takes off right at the opening bell. What do you do? I want you to burn this into your brain. Seriously, write it on a sticky note and put it on your monitor. This is the golden rule. You do not chase the lead, you react to it. See, chasing is all emotion, it's impulse. Reacting, that's strategic, that's data-driven. Getting this one little mindset shift right can literally change your entire trading game. So what does chasing look like? Well, it's seeing a contract already screaming up 100% and just jumping in, praying it goes higher. That is a losing game, my friend. For a pro, that huge pop isn't a signal to get in, it's the starting gun for analysis. The move has been spotted, now the real work begins. So if we're not chasing, what does reacting actually look like? Well, it's a simple 4-step process. First, you just observe the direction. Is it real? Second, you confirm the momentum. Is it strong? Third, you look for signs of continuation. And here's the kicker. Only then, fourth, do you select a new contract, one that fits your plan, your risk to maybe get in the trade. You don't chase that first one that already flew. This brings us perfectly to section 3, the whole confirmation process. Look, the first few minutes of the market open are pure chaos. A pro knows to wait for that dust to settle and uses a very specific window of time to gather real data. And here it is. Your confirmation window isn't the first 30 seconds, it's the first 15 to 30 minutes after the open. This is your time for patient observation. You're letting the initial frenzy burn itself out and you're looking for the real, sustainable trends to show themselves. So what are you actually looking for in this window? Well, it's time to bust out your technical toolkit. First, glance at the RSI. You're asking, is the momentum strong or is this thing totally exhausted? Next, look at the volume. Is it picking up, confirming the move, or is it drying up, which is a huge red flag? Then, is the price holding above a key level like VWAP? What are the candlesticks telling you? Are buyers still in control? And finally, step back and ask, does this move even make sense with what the rest of the market and the sector are doing? This is your data-driven checklist. And here's a little pro tip. Even if the move totally fizzles out and fails, you still win. Why? Because a field move is incredibly valuable data. It tells you about weakness in a stock, it can confirm a bearish bias, and it might even be signaling a great reversal opportunity you can trade in the other direction. All information is good information. This all leads us to a really important point about your mindset. In the end, the hit list is just a resource. It's a great one, but it's just a tool. You are the trader. You're the one in the driver's seat. So, this is what your professional pre-market routine starts to look like. You review the list, sure, but then you select a couple of names that look interesting to you, and you add them to your own personal watch list. Then you observe their price action at the open, and based on your confirmation process, you decide your own entries and exits. It's your plan, your trade, your call. This whole idea boils down to what we call trader's responsibility. What's that? It's your individual accountability for your position sizing, for your entries, your exits, and most importantly, your risk management. The list gives you the insight. You're the one who has to make the decisions. And that brings us to our final section, which really ties this all together. Every single morning, when you open that list, you have a choice to make. It's a fundamental choice between being a trader and being a chaser. And the difference couldn't be more simple. The chaser, they act on emotion. They're just looking for signals, they chase contracts that have already exploded, and they completely ignore confirmation data. But the trader acts on data. They confirm momentum first, they seek insight, not signals, and they meticulously manage their own personal risk. The question is, which one do you want to be? Because at the end of the day, it all comes down to this one simple question you have to ask yourself every single time. When you see that stock take off, when you feel that rush of FOMO creeping in, you have to stop and ask yourself, am I reacting to data or am I chasing emotion? Your answer to that question will define your path.